Welcome to the Corporate Finance and Accounting Talent Study Preview and Panel Discussion, brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. I'll be your host today. And before I introduce our expert moderator and panelists, let's take a quick look at the agenda. First, I'll share some brief housekeeping items. Second, some information about our sponsors. Next, I'll introduce our expert moderator and panelists. And then we'll get right to the study results and questions for our panelists, along with Q&A with your questions from the audience. But before we get to that, as I mentioned, a few housekeeping items. Attendees, please submit questions via the GoToWebinar control panel. We'll get to as many as possible in the hour. We will have 3 audience polling questions for both CPE credit and your own benchmarking. So please participate in the poll via the GoToWebinar control panel. Now, in answer to a frequent question, yes, you will receive a link to this webcast via email in the next 24 hours. So no need for notes or screenshots. So with that, I'd like to let you know about our sponsors who make this all possible. Bill in payment automation, and also recently acquired Divvy, or merged in with Divvy, so now cards. Insight Software is a complete suite of enterprise software, ERP software, planning software, etc. Allianz Trade is trade credit and risk management. Sage and Sage Intact is accounting and finance software. Burse, expense management. And Visual Lease, of course, is in leasing. So with that, let me introduce our esteemed moderator, Lindy Antonelli, who's partner at Armanino Technology Practice, and she's also board chair of the Controllers Council. And John, and also a Deloitte alum, I should mention, for those of you in the audience that are from public accounting. John Liacone is managing director and a co-founder of the Overture Group, and he is also a public accounting alum from RSM. Lindy and John, welcome and thank you for participating today.
Thanks, Neil. Hi, Lindy Antonelli at Armanino, and happy to be your facilitator today for this really cool hot topic that we've got going on. Hi, John. Thanks for joining.
How are you?
Fantastic. How are you today?
Excellent. I'm looking forward to the survey results and giving you some insights of what we're seeing in the market and what our clients are saying as well.
Great.
Yeah,
really
I meant to mention that the Overture Group is executive recruiting and compensation, and they do have a CFO and controller practice as well. So John really is a subject matter expert. So with that, I'm going to quickly look at the study abstract. And so I'm sorry. Getting back to okay. The objective of the study was to identify how controllers, CFOs, and related executives are managing finance and accounting, or F&A talent, along with such challenges as talent and skill shortages, hybrid and remote work environments, rapidly changing macroeconomics, staff turnover, and more. A national survey was conducted from May to July of this year, so right up to the webcast today, with more than 250 respondents. So let's take a look at some key takeaways. First, regarding hiring plans, only 2% intend to decrease F&A staff, with 30% increasing staff and 61% maintaining staff. Next, 68% of respondents find it difficult to hire and retain F&A staff, with 27 neutral on the sentiment and only 3% stating easy to hire and retain. Regarding work environments and return to office mandates, or RTO, a majority, 63%, will offer some hybrid combination of on-site and remote options. 26% will transition to full on-site, and only 9% will offer full remote. So I hope you find that interesting. While a majority of respondents, 60%, do not outsource F&A, a significant 40% do outsource, and 18% will increase F&A outsourcing in the future. And last but not least, overall F&A pay increases averaged 4.5% in the last year, with the executive category leading with an average of 4.7%, followed by directors at 4.6%, managers and administrative at 4.5%. So before we dig into our survey, we'd like to get your input and do a poll, and then we're going to go right into the same question to show you about the survey results. So let's get our first poll started. Again, use the GoToWebinar control panel. And what are your organization's hiring plans for F&A staff in the next 12 months? Select one of the following: increasing, reducing, or maintaining the same level. So please vote if you're going for CPE credit, and if you're just benchmarking against your peers. It'll be interesting to see.
Yeah, I'm excited to share the what our survey reported for this particular polling question.
Correct. We're going to head right into that, and we got to let a majority of you vote. So vote early. Not often. We are based in Chicago, but we can't vote multiple times. So please do vote on this with the poll. We're getting close.
Getting closer. Give them a few more seconds.
Yep. All righty. So let's get it up to. Yeah, we're into it.
Seeing the results.
We're into it in a minute, so I'm going to close it and share results. And so 49% increasing, 4% that measly 4% reducing, 47 maintaining. So so that is a soundbite, and with that, let's go into our own survey and
our own survey.
Take it away.
Yep. Yeah, I mean, I think the interesting thing is that we're different from our survey is a little bit different from our attendees today. So we said that 2% we're going to decrease, and our attendees are saying 4%. So our survey said 61% was going to maintain their staff levels, where our attendees are 47%, and 37% of our respondents said they were going to increase. We got 49% on our poll today that are going to increase staff. I think this is super exciting. And John, I'm going to turn it over to you for some key takeaways.
Yeah, and just for the audience, I specialize in executive recruiting at the controller, CFO levels and VP levels. And I've been doing this for about 30 years now. In the last 23 years, I've really focused in the middle market. So the survey data that you see is really consistent with what we're also seeing with our clients. Most of our clients, they'll add roles if need be. All right. And the reason I say that is there's been a lot of turnover. It's still a very hot job market for finance and accounting professionals. We see a lot of our clients taking a step back once people give their notice and leave to really look at their org structures. And a lot of organizational structures have been not looked at or neglected, and they'll find that what skill gaps are there. So those are a lot of the clients that are adding roles. And again, turnover still higher than what we would normally see in a regular market. It's a hot job market. It's slowing down from the 2020 to 2022 numbers. We're seeing some slowdown, but it's still very, very hot. Also, what's really impacting whether people are hiring or not hiring or creating is also retirements. 35% of all the work that we do is for retirements now. People are actually leaving the workforce and retiring. So that definitely has a lot to do with it as well. But but there's such a lack of talent between, at the staff levels and the mid-level manager, mid-level manager talent. That's what we're seeing.
Great, thanks for the insight. So you segued perfectly, John, into the next question on our survey. How difficult is it to find F&A talent for your organization? So, we've got 54% find it difficult, or 14 very difficult, which is really 68%, or 2/3 of our respondents find it hard to find talent. So I'm interested in what your perspective is, John, on this question.
Yeah. When I have conversations with business owners and or CEOs or presidents, one of the top 3 issues when I ask, what are some of the issues you're having in your organization? It's always staffing and recruiting, right? Hiring talent, attracting talent. It's always one of the top 3 issues. But I think the survey results are for this question are very consistent of what we're seeing. They find it neither difficult or easy or difficult. It's because of the talent shortage, but a lot of companies also, they're very good at what they do, whether it's a product or a service that they're developing, but what they fail to do, which makes it more difficult, is really understanding what their employer brand is. And the companies that find it easier to find talent have that identified, so they're attracting new talent. Also, they're creating opportunities. People leave, and we'll get into this later on in the survey, but also it makes it easier if you have opportunities to attract the talent inside your organization.
Great. Yeah, I think the brand is super important, and maintaining that brand and making sure that it is positively reflecting the work there.
And it's different than your product or your service brand. And a lot of companies fail to develop that.
Yeah. At Armanino, we call it culture.
Yeah. Absolutely.
Yeah. So we actually, on the next slide, the next question is, in finance and accounting, what skills are the most challenging to recruit for? Oh, the other slide is later that I'm thinking of. So respondents in this question were prompted to select all applicable functions or titles. Okay, so perhaps 39% report bookkeepers, and accountants is most challenging to recruit for. 34%, so roughly 1/3 of controllers and assistant controllers, which a large amount of our audience today is probably in that area, followed by FP&A at 28%. The least challenging, our survey found, were treasurers and audit and internal audit. And, maybe because those roles are skewed toward larger organizations. So I don't know, your thoughts on this, on skills, roles, titles, John?
Yeah, I think the most challenging role in today's market right now, by far, is the controller. And the reason being, if you really look at the controllership and the controller position, it's very all-encompassing, right? And they're overseeing most of the other components below. And so what companies have failed to do is develop and or train the pipeline to become the next controller, the next assistant controller or controller. When people leave the organization, because there's so many different openings out there, and again, it's a domino effect. People are retiring, people are moving, right? And there's that gap. And so this is the toughest position I can tell you right now that that our clients are seeing in terms of the controllership. Controllers are on the market and they're gone real quick because of they're just in such high demand.
Well, that's an interesting perspective, John. You know, Neil founded the Controllers Council about 3 years ago. I've been the board chair the whole time, and really the mission behind our council, we realized that the controllers are making more decisions. They've got more seats at the table. But they find it hard to business network, to get the training they need, you know, even assistant controllers to get the training they need to be promoted to controller.
Yeah.
So,
and also if you really think about it too, to play off of that a little bit more, the responsibilities on the controllership's plate have increased over the past 10 years.
they really have.
Which makes them more in demand. So.
Well, and too, especially, I mean, when SOX came into place, Sarbanes-Oxley, and the CFO had to take a step up and really, you know, sign off on things and put her or his signature on things. You know, that's the controller, I think, really got amped up. And so, you know, it's, I think, a lot of factors here, but those are all interesting perspectives. So I think we have another polling question coming up.
Yes, let's go to our second polling question. Launch poll. Will your company policy regarding on-site, hybrid, and remote work environments? What will be your company policy? Will it be a combination of on-site and remote? Will it be 100% on-site, 100% remote, or something else other? So please answer that poll with your control panel.
Yeah, I'm really interested in this one.
Yeah.
Most of my clients are going through this now with, the pandemic is behind us, and what does the new RTO, return to office strategy, look like? And what's best for the employer, what's best for the employee, what's best for your teams? You know, there's a lot of play. I know a lot of people that moved around during the pandemic, and they may not even be physically anywhere near the office anymore.
I've heard a couple of those stories from my clients when they wanted people to return to the office. People have moved during the pandemic and they don't even live in proximity.
Exactly.
I mean, I just chuckled, and it's I've heard it more than once.
Yeah. Well, it's an interesting problem to have.
Yes.
Let's close the poll and share the results.
Okay, let's see our results.
Hybrid, the combination of on-site and remote, leading 3/4, on-site 21%, remote 100% remote 4%, and we have another, so we don't know what that is.
I don't know what that is.
Yeah, let's compare that to the survey then. We'll get back to that.
Yeah, so this is interesting. It's kind of similar to our other polling question where, you know, we've got a little bit of difference here, but it's essentially sort of in the same manner, I would say. I mean, the majority are considering hybrid, obviously. So in our case, it was, you know, 63%. Our respondents are saying 74%. So personally, I like the hybrid. I think a lot of us got used to working, being very productive and working from home. But I still love the personal interaction of an office. So I do go in quite a bit. But the 100% on-site, you know, we're pretty off. We said 26, our respondents said 21. So, you know, it's probably not the most effective, especially if you're in a major geo like we are in Chicago and fighting the traffic and everything. So, or commuting. So, you know, that's pretty much online. The 100% remote, I still think, I agree with our respondents. We said 9, our respondents today said 4. And it's I am actually working with 2 clients now that are 100% remote that they don't even have an office anymore. So it's rare, but I have seen it. And this is pretty much in line with what we found in the survey. So, John, what are you seeing out there in the marketplace, and how does this compare?
First off, this is the $1 million question. I could, if I had the answer and I can go in and help clients, I do that all day long, but it's all over the board, right? It's all over the board in terms of what our clientele is doing. What we're seeing, a lot of companies that are 100% on site, those tend to be our manufacturers.
Yes.
And they've been essential services, since the start of the pandemic. But when you start getting to services, professional services, technology, that's a lot of times where the hybrid roles kind of come in. And depending on the role too, a lot of administrative roles in all industries, I'm seeing more hybrid, 3 days in the office, 2 days at home.
Yes.
This is a great attraction and retention tool. This is what candidates are looking for. I can't tell you how many times I talk to a candidate. One of the top 5 questions is a hybrid role, right? But this is what the market's dictating right now. And also, if you're trying to recruit and you're 100% on site, man, your talent pool just got real small, because now with the 100% remote, you could be here in a certain geography, in a candidate that you would like to hire has opportunities now coast to coast because of the 100% remote, if you're 100% on site. So companies really need to take a look at this and do what's best for them, but it's all over the board, my God.
Yeah, and I do agree. It is definitely industry based, manufacturing, distribution. I mean, they've really cranked through the pandemic and really had to be more on site.
Yeah.
So, and maybe for other reasons. I mean, I'm working with a very, very large nonprofit, which they're typically, on site. And that's the one that decided to cut all their real estate out and save a whole bunch of money and go remote. So there's a lot, there's reasons, there's business reasons why each org should consider it. But I see on your side with the talent pool, I think companies do need to be more open to the hybrid situation.
And if it's not hybrid, you're losing out, right? And especially in certain mid-level manager roles to executive roles, right? I mean, you're just gonna lose out on possible talent for your organization if you don't have some combination there, or flexible workforce as well.
Yeah, some kind of flexibility. But this gets into the whole CPA shortage. I mean, I read about it all the time. I'm involved with my alma mater and the CPA program that I went through, and it's it starts in colleges and universities, right? Even me, you could argue it starts in high school. Do they even know about accounting as a career?
Yeah.
So there's a lot that's got to change to help this art industry out here.
You bet.
But that really segues into our next polling question, because if you can't find the talent, the polling question, Neil will pull it up, but it's, are you outsourcing any finance and accounting? Let's see what we say here.
Does your organization outsource any F&A functions? Yes, we outsource some. Yes, we outsource all. No outsourcing of F&A, no outsourcing of F&A, but will likely in the future. So please take a look at that. Give us your perspective for both CP and your own benchmark.
And people are responding here.
If you are going for CPE, we will send those certificates out in the next 5 days or so.
Oh, great.
And there is a brief survey at the end of the webcast as well that we'd like you to take. So, all right.
Okay, give it a couple more seconds. What do you think, Neil?
Voting is slowing down to a crawl here, so I think we close it. Share it. 63% outsource some, only 6% outsource all, 25% no outsourcing, 6% will likely in the future. So let's see what our survey says.
Okay, so the Controllers Council survey, I would say, was pretty much flip-flopped. Our respondents said 63% to some and 6% to all, which is a 69% response. So versus 31% of we're not going to do anything. So it's pretty much flip-flop from what our original survey said. So John, how do you read into this? What can we learn from this?
You know, my clients are more in that 60 no, 40 yes, and it just, and I think it really depends. I really think it depends on the size of the organization. A lot of my smaller organizations outsource more functions, right? Whether it's, most people outsource tax because they don't have a lot of tax, departments. The larger companies do, right? But you're still always looking for that outside counsel. But if you're more of a transactional with very high transactions, sometimes, the billing, the AP, the AR, they'll outsource. But it depends on the size. A lot of my larger clients, they don't outsource anything except the tax and audit, And
so you're seeing kind of parsing it out by.
Yeah. It also depends too on turnover. And if you're not attracting if you can't attract somebody, a lot of my CFOs are starting to look at different options, and outsourcing is an option. They can't fill that role.
Right. Well, where we see at Armanino, we have a business outsourcing where we do accounting, HR, payroll, budgeting. We have some different sub niches as well. We outsource tax too, and internal audit. So some functions, but core accounting is usually done in-house.
Right.
I like the outsourcing of HR. It's becoming more and more important as we need, more HR sort of laws are coming into play, and the CFO and controller are dealing more with HR, and they may not have that expertise. So they may sub that out and outsource that employee handbook and the HR, onboarding and processing and things.
Yeah. And some of our smaller clients too, they look for companies like yourself to be their strategic advisor as well.
Right.
If they don't have a true CFO.
Correct. Yeah, we see that too.
And a related outsourcing question?
Yes. So will outsourcing functions increase? Well, or stay the same? I mean, they're saying increase only 18%. Status quo is about 3/4. So I think that kind of goes along with what we just said and what our respondents told us. Okay, so how confident are you in your org's ability to attract and retain finance and accounting talent? This was a really hot topic. And I think why they answered somewhat confident, we're going to find out in the survey question after this, is for a few particular reasons. They may be somewhat non-confident as well. So we're going to find that out in a minute. But yeah, John, what are you thinking? Why would some of your clients, you probably ask them the same question. I mean, when you're interviewing them, right? How confident are you? What are they saying to you?
Yeah, a lot of them at this point, because of the way the market is, they aren't, right? They're not.
Yeah.
They know it's very hard because not only are they attracting finance and accounting talent, but talent throughout their company, and they're finding it very hard to find people right now. But those companies become a lot more confident, and this is what we see when these companies have good strategies in place for recruiting and attraction. They're staying current and relevant in the marketplace and in the community, right? That's how you develop the employer brand. That's how you market your company, by staying current and relevant. Also, if you're able to give the training, the development, and the opportunities, you're going to attract talent that way as well. And you'll see that, I think, in the next slide. But those are the companies that are attracting talent easier. One question we always ask, I don't take on a search without asking, what are the key initiatives for the first 12, 24 months? Why? Because this is what brings the position to life. This is how I'm able to sell the position. This is the opportunity you're going to have, right? Maybe we're doing a debt refinancing. Maybe we're doing ERP implementation, right? Maybe we're doing a merger and acquisition that, you've never done that, right? So it's opportunity. People are looking for opportunities. That's how you take somewhat confident in recruiting the right folks to become more confident, is opportunities too.
I love that. So to reiterate what you said, you ask your clients, what are your strategic initiatives for the next 12 to 24 months? So
For the role.
I would challenge our attendees here today, or the folks that are going to listen to this on the recording, the same question. Ask that of yourselves, of your own organizations.
That helps us. We're an extension of our clients when we're working, right? So if they don't have something different or something somebody's going to get engaged with, they're going to have a tougher time finding talent, or they're not going to get the A talent, which a lot of our clients want.
Exactly. Well, again, how confident are you? The confidence factor goes to the next question. And this is a little bit of a busy chart, but we wanted to share all this with you. So which of the following benefits or perks does your organization currently offer to attract and retain finance and accounting talent? So we can see benefits was first, and by the way, they could have picked more answers than just one. So they're saying benefits was very high, and company culture and employee engagement. That I personally love that. In our Naperville office, before I even merged in with Armanino, my company had a very high culture index. We were a core solid group. We're a small office. We've now expanded to a Chicago office. We have, probably 40 offices around the country, but our Naperville and now Chicago offices have extremely high culture indices, both of them, because it starts at the top, and I'm at the top, and I lead by example and make sure that everybody feels personally welcome and part of our team. Even though in our business we're consulting, accounting, and tax org, we don't always work together like on the same team, but we are for our office geo. So I think it's real important to understand the different roles that leadership can play, in a lot of these things, but also certainly the culture. Of course, competitive salary. We just talked about the hybrid work environment. That was, John, I think you said that was one of the first 5 questions that anyone asked you.
Yeah.
And then training, of course, as controllers, we just talked about this, on-the-job training. It's super important, but it's hard for companies to deliver that training. I mean, that's why we founded the Controllers Council. So we have to look outside of the 4 walls and maybe give other options to our people for training and development. Flex schedule kind of goes with the hybrid and remote a little bit. And certainly the automation. Oh, I'd love to talk about that. That's right down my alley. So maybe at the end, if we have time, we can mention automation. So why don't you chime in on this one, John?
Yeah, this is always an interesting topic. People would always think money's the top issue, and it's not, right? Money is an issue. Don't get me wrong. I can't tell you how many times we get a candidate down to the wire, and it's great. great company, great culture, the whole 9 yards, go blah, blah, yada, yada, flexible workforce, comes down to money, right? We're gonna, it comes down to making sure you have the right compensation structures. But
If
a
you
lot of
check
our,
off all the other boxes.
yes, after that. But the most important thing I really feel of what we're seeing with our, with how do you attract and retain talent, it's engagement, employee engagement and culture, right? Are you engaged in your work? Do you like your work? Are you being challenged? And is it the culture that fits you and parallels who you are? And a lot of times, before people accept roles and or take new jobs, they do not assess the culture and who they are, right? And you'll once you're into a company that parallels and aligns with your values, your value system, and they're keeping you engaged, you're really gonna retain the folks. Salaries over the last 3 or 4 years have increased. A lot of companies were buying employees. I can tell you right now, they were buying controllers. Again, that's one of the hottest roles out there for finance and accounting. I think that's leveled off now. I think the escalation in salaries has leveled off, but it's really screwed up internal equity within companies because people were having to pay so much for certain skill sets, and especially the controllerships, that it's throwing some other things out of whack. But to again, what I said, it's employee engagement, it's the opportunities, right? This is what employees are looking for to come to join a new company and then also stay.
Yeah. Getting them, attracting is one thing, retaining is a whole other thing. I mean, it costs a
Huge.
lot of money. I know we have a big recruiting department, and it costs a lot of money to staff a recruiting department to go to hire you to do it, to go through the process. They want to make sure they keep them.
But you spend a lot of money getting them, but you have to really focus on that retention piece, and it's in the employee engagement is where you really are able to keep folks.
Yep. Great. I personally love this question. But we are moving on. We have a lot more to cover, and we just have a few short more minutes. I'm keeping track of the clock. So the next question that we asked was, what were the average pay increases by staff during the last 12 months? And this is, we picked 4 areas. We broke the, what was the pay increase by executives, by directors, by managers, and then what we called administrative, so staff. And you can see that in each of them, it was a little bit different. Executives, ended up 46% of them ended up getting, at least a 3% increase. But if you combine that with, it's 80 something for up to 7%. So the managers seem to get a little bit more. Well, the orange bar is the weighted average, so you can see 4.7% was for the execs, directors 4.6, managers 4.5, along with administrative. So I don't know. I don't know the pay really, so I cannot talk to this question, but John, I'm sure you can. What are your thoughts here?
Yeah, and I'll try to keep it at the manager level. I mean, I'm most informed from the manager level and above, and we've seen a 4 to 7% increase in the last 12 months. But you have to remember that's internally, that's your internal pay increase, right? And that's only base pay. But we're also seeing our folks looking at their annual incentive programs.
Aha.
And then also we're seeing more and more, and again, I work a lot with privately held and mid-sized businesses. For them to compete on a larger basis for their managers and executives, they're looking at their long-term incentive pay as well, right?
Well, long-term retirement benefits and
Yes.
stock options if you're private, that kind of thing.
Phantom stock, stock appreciation rights programs, things like different types, right? So they're looking at that, but those
Okay.
numbers I could tell you, the pay increases. Sometimes people leave for a pay increase, and I could tell you over the last, and again, it's starting to level out, but especially at the controller level, my God, they were getting, 20 to 15 to 30% increases to make a move. It was
Wow.
amazing when I was talking to my clients what they were talking about, but I think it's leveled off now. It really has.
Well, and that has to do with inflation leveling off and everything. I just saw
Sure.
something today on that. So there's a lot of things going on in the economic conditions and all that. So, okay.
So it's pretty consistent what we're seeing.
Yeah, good. All right. So we have another couple more slides, I think, with questions. Okay. So what are the most common reasons that finance and accounting staff are leaving? Okay. 47% stated a lack of career advancement opportunities is the key driver of attrition. 29% inadequate benefits and comp. We kind of talked about that. 25% burnout. And, that seems pretty consistent with, what I'm hearing in the market. I don't know, John, what are your thoughts here?
Very consistent. Like I talked about, a lot of times to retain folks so they don't leave, it's employee engagement, it's opportunities. It's giving them the opportunities internally to learn, to grow and advance. That's always the biggest. And then making sure you have strong compensation structures and you're paying market price. Because once somebody, you can do a lot of competitive analysis out there by just going out and starting to interview, and you find out what the market is, right? And there's surveys all over, right? Right now, people could look at. You got to make sure you got the right compensation structures in place. That'll really help. The employee burnout, I think our employees from 2020 and 2021, I think we saw the biggest burnout. I think it's getting a lot better. I think the pandemic, because people didn't know how to work, we had this whole different work, it burned them out, right?
Well, they didn't know how to work. And then also, I speak on behalf of our clients because I'm in cloud technology, so we kind of made it easy for them to work from home. But what they were doing was different job duties. They were doing 12 and 13 week rolling cash forecast. What is my cash in the bank? How do I apply for PPP? How do I keep these? I mean, it was like a whole different work set they had to learn in the beginning.
With a lot of deadlines and a lot of pressure, and they had a lot of burnout because of that.
Yeah.
Right, and like you said, they knew their job, but they're learning how to do it in a different environment, in a different way.
Right. Yeah. Now, John, does your firm do would a company hire you to do a compensation study for a job or?
Yeah, yes. So we do executive search. That's half of the house. That's the house that I run. And then my partner runs the compensation consulting practice. So we do benchmarking and compensation studies, and we also help our clients with their annual incentive pay and then their long-term incentive pay as well. So we do a lot of that. Yeah. And in our comp practice has done very well in the last couple of years because of what's happened in the market. Clients want to make sure they got the right compensation structures in place so they get to retain their folks.
Right. I mean, that's what we've all been talking about here for the last 45 minutes. Okay, well, we're going to move on to Q&A, but we have one more slide just to show you the different classifications and demographics that we ask. What is your title or your role? The thing I wanted to share here on this panel discussion is the title question. This is to reinforce the large percentage of controllers and CFOs that actually participated. Between CFO, controller, and VP of accounting, it's the vast majority of our respondents. So it is relevant and pertinent to the finance and accounting team. Okay, I'm going to turn it over to Neil. He's monitoring Q&A.
Yep. All right. Thank you. And again, yeah, let's do audience Q&A. So just a reminder, please use your GoToWebinar control panel to pose a question, and we'll get to as many as possible. I do have a first question that I think we've touched on, but John or Lindy, jump ball, what can be done to address the accounting and or CPA shortage?
John, why don't you take that one?
Yeah, I don't think you're going to solve it overnight. I think it starts early on in terms of introducing students to accounting at an earlier age, especially in the high schools and in companies partnering with them. I know some of the schools out there already do that because then when they go into college, they're on that track. But also, I really feel they you need to look at the requirements because the requirements are not easy, right? I mean, the time, the amount of work you put in, the class load. And again, this is just my opinion. I think you'd have more people going into it if you and again, I don't want to get into this. You lax the requirement, but you have to look at the requirements. Are the requirements right, and are they at the right level?
Right. I
thoughts.
know. I mean, when I studied for the CPA exam, I only had to take 120 hours of school, and that's 150, and that's a master's, and that's a whole lot of money, more money, another year being out of the workforce. That I think impacted the accounting industry right there. But aren't some states now laxing on that part?
I think the Minnesota CPA Society now is pruned back 30 of those hours, to your point.
Wow.
Okay.
And the AICPA has initiatives to allow you to work to go into the workforce and get the last 30 hours and that kind of thing. So there are initiatives, and I would say that the Controllers Council, one of our missions is to build awareness and understanding of the opportunities in corporate accounting and finance that everyone in a CPA program, it might be more focused on public accounting, but really the controller track often starts with public accounting, but there's huge opportunities on the corporate side. So we're just trying to build that understanding.
Well, yeah, we realized at Armanino that that at about 30, 35 years old, women were dropping out of the workforce. And it's kind of that burnout thing, but they were starting to raise a family and couldn't keep up with the hours, and they were dropping out. And so we've actually done a lot internally at Armanino to retain our sort of the female talent at that sort of early to mid 30s up to 40 years old. We're trying to keep them in.
Yeah. I got another question here. How will AI affect corporate accounting?
Yeah, I thought I might be able to get that one in there. So AI is artificial intelligence. This is the world I play in every day. And well, it's software publishers are taking advantage of it. First of all, the concept of automation or artificial intelligence is to use computer brains to do the work instead of the human brain, and let the human brain, why you hired them in the first place, is to provide the value add of solving more complex business problems that are harder for a computer to solve. So that's the premise behind it. And I think it works really well in accounting technology because, for instance, Sage Intacct, one of my solutions that we sell, has a GL outlier detector, and it's built on artificial intelligence. They go into the journal entries once a month and they scan them to see, or it can be scanned every day to see if there's an oddball journal entry made that is not consistent with patterns that have already been in the system. So It will easily find the needle in the haystack and report something. I mean, potentially it could be fraud, potentially it could be, you know, a miscoding, but there's a lot of reasons behind it. That's key, and it's very hard for a human, and boring too for a human to do all that. Both Microsoft and Sage are building artificial intelligence into their bank reconciliation process. Okay, because not only matching, checks that are cleared, but again, detecting potential fraud, looking at these accounts, flagging things so that the human could really do some advanced research on it. So I think software publishers are getting on board as well. And then, Armanino, our firm, we have an artificial intelligence practice area where we focus on internal audit. So we do what we call continuous audit. So that's a software application that we developed that can reduce the amount of audit fees, but also catch something quicker in the cycle so you could fix it before the auditors get there. We have RPA, which is robotic process automation, and we do that in our system implementations with data migrations. We have expense reporting solutions that we tie that to, and then also, employee onboarding. Again, accounting is taking over more HR, and it's a tedious cycle to get an employee onboarded. And then what the other thing we see is predictive analytics. So using the past to determine the future. So it's all about seeing patterns. And so if you can use a computer to do that, for instance, for budgeting and forecasting purposes, if you can automate 80–90% of that and just give it to our controllers or our CFOs or finance people to really get it across the finish line, they're going to be more motivated to do their work. It's going to be more productive work. It's more valuable to the business, and it's more rewarding to the employee. So for all those reasons and many more, I could talk about this all day long, but AI is going to be very key in the future.
All right, well spoken, Lindy. Thank you for that. John, what is your crystal ball for F&A talent in 3 years, in 5 years, just the future? Where do you think it's going?
Well, I think there's skill gaps and talent shortage now. I think it's going to be escalated. It's going to continue to grow unless we continue to develop and train and engage the F&A talent, unless we recruit more people into that arena. I think we're headed into a continuum of talent shortage there. I really, really do. And this is just me. I'm going to give you opinion now. In 3 years, I'm worried about the next generation of leaders because of the young workforce wanting to go 100% remote.
Mm-hmm.
I learned as a leader at a very young age by being present and being in a room and watching how leaders of an organization interact and how they made decisions. Technology, there's a place for technology, absolutely. But my concern is the lack of leadership because of technology as well.
Wow. Okay.
I get on my soapbox a lot with my clients when I'm talking to the presidents or owners of companies about that. I mean, there's got to be a good balance. That's why I believe you have to be in the office and you have to be present if you want to be a leader, because that's how leaders learn.
Neat. Lindy, any comments on this?
No, I just would ditto what John was saying. I mean, he's nailed it there.
Yeah, and Controllers Council, some of our top read articles are about the accounting and CPA shortage, or about controllers as the hottest job of the decade. And I think if we could build awareness and understanding around the opportunities in corporate accounting and finance. We think we could attract more people to the profession, and but often it does involve some public accounting experience as well, which is great. But it is the road to the C-suite and the road to career success. So that's what we're trying to communicate. And over time, that should have an effect to attract. You know, when you see those lists of top degrees and for pay and things like that, accounting isn't on that top list yet. But when there is a shortage, and we've had some big increases, as John's mentioned.
Yeah.
So that could turn around over time, but also building up this awareness and understanding that there's really great opportunities in corporate accounting and finance, and there's new opportunities to bring in skills in data analysis and that kind of thing. That and I think CPA curriculums are beginning to include that. So what else? Any other parting comments, John, Lindy?
Lindy?
I just want to thank everyone for participating today, both in the survey, in our polling questions, and asking questions here today. You can always reach me or John. You can find us on LinkedIn. If you have any questions for us, please feel free to reach out where we respond on LinkedIn. You can go to my website, armanino.com. You can probably go to John's website too, the overturegroup.com, and find them there as well. We're happy to answer any other questions that you may have, and attend another upcoming Controllers Council event. We'd love to see you there.
Well, thank you for that, Lindy and John, for your great insights today. We're getting to the top of the hour, so I'd like to thank our sponsors again. And last but not least, I'd like to thank all of our attendees. Great success to you in 2023. Goodbye.
And beyond.
Yes.
Bye.
Bye-bye.